Hello and welcome back to Bunnex Investment Group. I hope you had a very good Christmas holidays. And as we are now preparing into a new trading year, I hope each and every trader who is serious with his or her career is taking this time to backtest the market. So in this video, we are going to be talking about a powerful TDI trading strategy that you can as well include in your Asset strategies. But before we jump into the whole video, you may as well check out our free Telegram channel. The link is right in the description box below. So without wasting much of your time, let's actually jump into the video. So the first thing that I'll do is to define what a TDI is. So a TDI is basically an indicator that derives most of its properties from the relative strength index or RSI indicator. So I'll provide the indicators for the MT5 as well as the MT4 in our free Telegram channel, so that if you don't have it on your MT4 or MT5, you may as well go there and download it. So if you used TradingView, you can simply search for the TDI indicator. It will come out. So the TDI indicator is an indicator that actually shows market sentiment as well as volatility at the same time. So in this case, we have two bands which are derived from the Bollinger Bands. In my case, they are in blue color, and then the one in green is a moving average derived from the relative strength index. So basically it's actually an RSI line, and then the one in red is a moving average, which is there to give us focus on the movement of the RSI line. Then the one in yellow is a 50 EMA, which is basically a moving 50. It just demarcates the upper part and the lower part of the indicator. So whenever we are to use this strategy, we will first need to see the behavior of the RSI line on the H4 time frame. So the first step is to see the behavior of the RSI line, which is in green, on the H4 time frame. So on the H4 time frame, what we will need to see is to see the RSI line actually piercing through the upper volatility band in blue, which is this one in light blue, or the piercing of this RSI line on the lower volatility band, like that. So after seeing these piercings or these breakouts from the volatility bands, we need to go on the H1 time frame. It's actually a point where we would expect to see reversal of the market, usually on the smaller time frames. So what we are basically trying to say is we try to mark out these points. So in this case, the line or the RSI line went out of the band, and we were now going to look for a possible reversal entry pattern on the H1 time frame. So the pattern that we'll be looking for on the H1 time frame is an M or a W. So we'll be looking for an M or W after piercing out of the RSI line of the volatility bands on the H4 time frame. So let's backtest and see it in real play. So in this case, I'm going to first mark out the points where the market actually pierced out of the volatility bands, like this one, right? Another point was this one. Another point was this one. And we also had marking all the points, and this one is another point. So after marking these, it's basically a backtesting process, and on the H1 time frame, we'll be expecting an M if it's actually on the upper part, or a W if it's on the lower part, and our target will usually be to get 100 pips from the move from the particular pattern that we would have marked. So going on the H1, let's also mark so that we won't be confused. This is the point that we have marked on the TDI. So another acceptable entry pattern is the head and shoulders. I'm sure each and every one of you once came across that particular setup, head and shoulders pattern. So just marking so that we won't be confused after we switch to the H1 time frame. So on the H1 time frame, the first point that we have marked on the H4 time frame when the RSI line pierced through the volatility bands was this one, and at this point we had shoulder, head, shoulder, and our entry point will be the first candlestick below the 13 EMA on the H1 time frame, no matter the trading session. So from there we were actually going to book our 100 pips. Then after that we had this particular pattern. In this case it was an M. Unfortunately, there are some things that I won't say in this free video that we teach in the master classes. M's and W's needs to meet 3 criteria for them to be tradable. So in this case, the first candle closure below the 13 and our 100 pips was going to be hit, as you can see from this point going down. Right here we had this particular setup. It actually had the first leg and then the second leg. Unfortunately, we were not going to hit our target of 100 pips, and we were going to probably have half. Actually, in this case, we're not going to have a complete target move. Therefore, we would say that this trade was definitely going to be a loss. Then on this particular setup, it was an M, but you can see that there was a very fast moving candlestick. There usually was a news release at this point, and it was something that could not be entered. But as we saw this retest of the same position, it gave us an entry point which could allow us to book 100 pips. At this point, we were definitely going to book our 100 pips. Then another point that we have marked was this one, right? From that point, if we measure, we would see that it was not going to hit our take profit. Therefore, we would treat it as a trade that was going to end up as a loss. And at this point, we had this first leg longer than the second leg, and our entry was going to be at this point, and we were definitely going to hit our target. So basically that is what we'll be looking for. The first thing is to see the RSI piercing out of the volatility bands on the H4 time frame, and then go to the H1 time frame to look for a setup that I've already mentioned. On that note, we come to the end of this video. Check out our free Telegram channel. The link is right in the description box below. Have a blessed day.